Good morning, everyone. December the 16th, 2015. The day has finally arrived. We've been threatened with interest rate increases off and on for a year, and today a bump of 25 basis points should be in the markets. The issue is, what will it do to the markets? Equities are going to hit the E-mini, the ES will hit the number mid-range of its trading range at 2050. The tendency is for it to rally no matter what. Treasuries have been sold into it. So on paper, the trade with the most potential is a long in treasuries before the announcement. On the E-mini, because we're in the middle of the trading range, we've come back. We're going to hit it. The E-mini is going to hit it. The announcement neutral. We have a lot of news today. Housing starts, that is, plus 1.141. It's kind of been a word spent. Really, 1.15 has been kind of the default number. Permits plus 1.146. The big number, industrial production minus 0.2. Manufacturing production plus 0.1. I don't know how they get that, but that is the forecast. Capacity utilization 77.4. Flash PMI manufacturing, or manufacturing flash PMI 52.4. This is considerably higher than the ISM index. Actually, it's 52.8. Crude inventories minus 0.3, 300,000 barrels. And then the FOMC will be followed by a press conference a half hour later. This is the first interest rate increase in 9 years. It is the first interest rate increase under the zero interest rate policy program that was started back in late 2008. So it is a big day. It is here. We're going to see what we've got. I would imagine we got a seller 4 to 8 right now. So 3 to 7, sell 1. Pretty much where we were yesterday. 11 to 15, sell 2. On the buy side, a little bit lower. Volume is a B. We're going to try for 25s to 29s. May take a 30 to get in. And then 17 to 21 for buy 2. Looking at the 30-year. London high of 26. Post had a high at 21, so 20 to 24 is pretty good resistance. And maybe 16, so we'll make 19s to 23s. Sell 1. 31 to 03, sell 2. On the buy side, 5 to 9. And then stops below 154, 28 to 154 buy 2. Basically see a trading range in treasuries. Gold was probably the quietest market overnight. Left gold with a 64 to 66 sell. London's high was just above 1065. Our buy was 55 to 57. Did not get close to it. So we've got a P. This market has been sold into the FOMC announcement. So a rally, a relief rally in gold after the announcement hits is the trade on paper that has the most potential. So we'll 65, 67, sell 1. 70, 72, sell 2. On the buy side, 61 to 59, buy 1. And then 56, 54, buy 2. I think longer term gold is going to retest at least the 1050 area. Jimmy Rogers swears it's going to 1,000, where he's going to buy it all up. So we'll see if that plays out given some time. I know that the market makers and those with ETFs and physicals and everything else like that would like to see the price lower to shake out some of the buyers, free up some supply. But I think every dip is bought for the right reasons. People are scared. You either have outright war in your country, or it's impending, or you're looking at governments printing money as fast as they can. Okay, the euro, 108.50 is probably best support, so 108, 108.50. If we do raise our interest rates, the euro should be lower, so, and we are forecast to raise them, so a sell. A little bit different dynamic. What's facing us, so the 75 area, sell 1. Sell 2, 110 even. On the buy side, we'll make 109, buy 1. And 850 buy 2. Crude oil, inventory day. Rich Genders will be on at 12 Eastern today. Okay, we're 38 is where resistance is right now. We're close to that. Everybody's pretty sure that we're headed lower, so 37.25, 37.50, sell 1. 37.75, 38, sell 2. I think we are headed lower. 36 and a quarter, 36.50, buy 1 is where support is. Then 35.75, 36, buy 2. And they're looking for a draw of 300,000 barrels. Okay, several articles out overnight that the squeeze for this week's option expiration came on yesterday's opening when the market rallied. I think 28 unanswered points, so we'll have to see how that plays out. Triple witching, end of the year, all sorts of stuff happens on Friday. And as you can see, or as you will see right here, we're just kind of right in the middle of the trading range. We got a seller at 2100 plus. We got a buyer at 2000 minus, and last trade's 45. So we're just pretty close to 50% neutral. So Fed support at 2000. Fed doesn't really care what happens when we get up to 2100. Option expiration. Some of these people are still short. So a rally. Based on who's short, etc., is probably more likely than not. Based on where the options are, a close on Friday at 2050 is how the math works out. Yesterday's plays was 2,000 in puts, 2050 in calls. If you go back and look at the open interest, Open interest in puts is at 2,000. Right now, the best open interest number on calls, the highest one is at 2,100, and again, that comes out 2050. So, a lot of reasons for the market to close at 2050. Come Friday, okay, 49 to 51, sell one. Got this high over here. We'll make 58 to 60, sell two. Picking up this high right here, something above 50. On the buy side, I think we're probably going to work ourselves a little bit lower. So 41.39 buy one, 36.34 buy two. Housing starts plus 1.141. I love it when you go to the third decimal place, don't you? The marvel and magic of computers. 1.146 on permits. Industrial production minus 0.2. Manufacturing production plus 0.1. It's hard to see where that number comes from given what's going on in the oil patch. Capacity utilization 77.4. Manufacturing flash PMI. And again, this is probably 3 points higher than what the ISM manufacturing is. Crude oil minus 300,000 barrels. FOMC plus 25 basis points. With surrounded by dovish language, so nobody's looking for a lot of Fed language about raising interest rates. PDQ again. So support 35 to 40, resistance really 50 to 55 as we start out in the E-mini, and it's going to take a bit to get everything up. I'm going to get busy on that. I'll see you as soon as possible.